Hello, hello. I think we're live, Steve. Can you hear me?
Hello, hello. We are live. It's 1 o'clock. It's the hard money in the headlines with Jess and Sless. She's Jess, so that makes me Sless. Uh, Here we are. We're talking
Yeah.
all things hard money. So
Mhm.
again, my name is Steven Sless. Trius Lending Partners is who we are. We're a private hard money lender and investment company. And we've started this show to talk about all things hard money, investment, real estate markets, you name it. So if you're driving, turn the radio up. Uh, Listen up. If you're on your phones, stop what you're doing. This is going to be the fastest 20 minutes of your week. We're here to answer all of your questions as well. So uh, please provide feedback in the comments. Ask us stuff so we just don't sit here and talk for 20 or 25 minutes. We'd love to hear from you and we love to hear what's on your mind. In the meantime, how you doing, Jess?
I'm good. Busy as always. Busy with, investor relations. It's been a great quarter for us. Busy personally, still doing some stuff with real estate. If you're curious, we can get into all that. So still at it, of course, personally and professionally. How about you?
I'm a little sad today, Jess. I'm a little sad.
Oh
We were
boy.
we were
How could you sat
slated
in
to
that
go.
purple shirt? I have
You
questions.
like the purple shirt? I wore it just for
I
you
do.
today.
Thank you. I'm in black,
Yeah.
which is like very on brand for me. Yeah. What makes you sad? I'm super curious.
So we had plans to go to this big commercial real estate conference at the Fountain Blue in Miami in June. What could be better? It was
Right.
canceled.
What could go wrong?
We just got
Oh,
notification
that
that
that went wrong. That
the
okay.
entire conference was canceled. So yeah, we were supposed to go to Miami in the summer. My executive assistant Henry is very upset. He was eagerly looking forward to a trip to Miami in June. What could
Yeah.
be better?
Mhm.
So yeah, little sad today, but otherwise, the sun is coming out. It's still March Madness. Baseball's back. O's opening day is tomorrow. So in the grand scheme of things, things are well.
I'm curious, why do you think they canceled that event?
I mean, so their reasoning was attendance. I think look, it's a lot of commercial real estate folks from
Mhm.
all over the country. I think the real estate market is a little slow right now, and we'll get into that as the show progresses. Um,
Yeah,
maybe the cost, right? It wasn't a cheap conference to attend.
that's my
Um, but we
interpretation.
were we were we were expecting. I think there were supposed to be upwards of 1,500 brokers showing up at this conference from all over the country, real estate investors, brokers, just folks from all walks of life in real estate. So we were pretty surprised that it was canceled, but there's other
Yeah.
conferences ahead. They're not in Miami, but they're coming
Yeah.
up. I think there's one in Indianapolis that we're going to be attending. There's a Virginia one that a few of our folks are attending this coming weekend. So Trius is looking to
Okay.
get out there. We're looking to make a presence and be at these conferences, talk all things real estate, answer questions, talk to borrowers up and down the East Coast, talk to brokers up and down the East Coast, and be a resource.
I mean, it's super interesting, right? So, I mean, the whole point of this conversation is talking about headlines and these kind of big, poignant headlines. Real estate volume, transaction volume has been a dominant headline. And it is funny because I think both on a business level for Trius Lending Partners, and I can speak to on an individual level just as an individual investor, but you just hit on it, right? Like, this conference, it kind of looks like, volume, which would, impact people's ability to attend or willingness or desire to attend a real estate conference. Like it's these anecdotes that actually do support some of these headlines. And so
Sure.
that is interesting. It makes sense to me, right? Like the industry
It's it's
is
it's it's certainly not because the location sucked.
right.
It's,
I mean, but you get to
I
go to the other Miami, aka Indianapolis, so it'll be fine. Yeah, that's interesting. I mean, I can speak, personally. My husband and I, of course, we are invest in real estate. So I've done some flips, quite a few flips, and then we have our own little portfolio that we're growing. And I will say this: I am not trying to flip right now. I don't think it's an easy time to do that. I mean, Of course, if the numbers work, the numbers work. And if you can, you will. But we've got a project going on right now ourselves. We're rehabbing a house, improving it. So a lot of work. We're redoing everything, candidly, windows, floors, all the interior, new electrical panels. But we're going to hold, and that's our plan. And that's really based off, again, some of these kind of headlines we're seeing, but what it really feels like at the individual level, which is when we're running our numbers, we're not sure we could get what we would need and want to flip, but it doesn't make it a bad deal. It just means that the outcome, it looks better with, a long-term buy and hold and rent out the property and stuff like that. So it's interesting to hear kind of what you're experiencing there, and then I guess associate that with my personal experience as well.
Yeah, I'd love for you to elaborate more on that. Is your decision to hold, does that have a lot to do with rates coming down, DSCR loans being a little bit more affordable and properties cash flowing better as a long term, or is that more to do with market by market, right? You're
Yeah,
probably the foremost expert here in all things real estate nationwide, because you live it and you breathe it, right? And you were a
yeah,
real estate investor before head of relations here at Trius. So I'm
right.
always fascinated to hear your opinion on when I hear you say you're not flipping and you're holding. That carries a lot of weight for me, and there has to be some good reasons behind it.
Sure. Interest rates. Boring. So, okay, so hear me out. Hear me out. So, interest rates. Okay, we talk about headlines. Like this is a lot about headlines. Interest rates continue to dominate as the headline. So, but they mean different things, right? So let me break it down. And you're asking about like my personal. There'd been a lot of hope and maybe a little bit of expectation that they would be really coming down in a meaningful way as it affects like long-term mortgage interest rates. So what somebody will experience and feel as they're trying to buy a house, or in my case, once we finish this rehab, we'll enter into like long-term debt service coverage ratio loan, right? Listen, I don't think, interest rates, they did come down a little bit, so they were ticking down. Now they've ticked back up. Obviously, they're not directly correlated with the federal funds rate. And I'll kind of talk about that here in a second. But obviously, inflationary factors and these other things, like they're all at play, right? And I think because you have a bunch of conflicting factors and things going on, interest rates are just going to continue to do what they're doing, tick up a little bit, tick down a little bit. And so that's why I said boring, is because, if, at my level, I need to underwrite and plan that, a couple months from now, when I am refinancing this property, or even if you're trying to sell it and somebody's looking to buy, that interest rates might be a little bit up, they might be a little bit down. But on the whole, I don't think you're going to see, this is my guess, this is only my take on it, right? So this is not any sort of formal advice. I don't think you're going to see some insanely meaningful movement as it relates to interest rates. And people need to plan for that. You need to plan. The interest rates could be a little bit more expensive a few months from now, and they could hope that they come down. But I don't think it's going to be some giant swing that's so, you know, impactful in an individual way to how deals are done. I think they're going to be relatively steady. They could go up a tiny bit. But interest rates, I think, are still a really interesting headline because there are inflationary factors. The Fed is watching all of this. And as the federal funds rate impacts the overall cost of capital, I think that is a headline. I think that's a headline that is affecting commercial deals, commercial property and
Yeah.
commercial real estate. And so that's not necessarily affecting Jessica Franta and her, one little house she's
Hmm.
rehabbing. But I do think that story is impactful. And I guess I'd be curious, like your thoughts kind of from your seat as it relates to like the larger picture and interest rates and all of that.
Yeah, I mean, my seat is an interesting one because I get to see 360 our business in
Mhm.
every department. So we're certainly seeing an uptick in long-term debt service coverage ratio loans, DSCR loans, and those are 30-year fixed loans. What our bread and butter is the short-term hard money, but we also do loans that are long-term financing loans, DSCR loans, and we've had our best few DSCR months that we've had in a long time, strung together back to back. So the first quarter of this year has been phenomenal for long-term exit loans, long-term 30-year fixed DSCR loans, and I think that has a lot to do with interest rates trending downwards and folks feeling like they can hold properties, to your point, long term, and cash flow on those properties because they can lock in a nice low interest rate.
Do you really think it's because interest rates actually trended downwards in such a meaningful way, or do you think people just became accustomed to the new stabilized rate and they just realized like this is sort of where we're at, kind of what I was describing?
Yeah, I think it's both. I think for most, the interest rates, what they hear about interest rates matters. I agree with you that to
Yeah.
us it's boring, and yeah, they go up and they go down. It doesn't really impact our business all that much. But for an investor who may be wondering, well, how do I make money on this deal, right? If a flip
Mhm.
isn't on the table right now, if I can't turn this property, renovate it, turn it, make a nice profit, can I hold it? Will this property cash flow? And there's a big difference in some cases, particularly on larger size loans, between 7.5, 8.5, like we saw over
Mhm.
the years, and that just became the new norm, and where we are right now in the high fives, low sixes, right? And
Mhm.
and that could be a difference between does the property cash flow or not? Can they make money on that property or not? And so that's certainly real. We're seeing
Mhm.
it play out, and our long-term financing business is growing quite a bit. So much so that we now have a dedicated processor to facilitate those deals because there is so much volume coming in from those. You mentioned commercial. On the commercial
Yeah.
side, big boom in commercial business for us. We're seeing an uptick. We're cautious about it, right?
Mhm.
We historically have always been a um, residential home lender on investment properties, but we are participating in some of these commercial opportunities right now. There's good commercial opportunities. There's also great mixed use opportunities, multifamily opportunities, right? So we're not seeing as many of the singular fix and flip or singular buy and hold of a single family rental or a townhome. What we're seeing is a lot of small, they used to be called apartment buildings. Now now the terminology is multifamily, over 4 units. Customary for us is like the 8 to 12 unit. We're seeing a lot of that right now, and we love those deals, and we're here to fund those deals. We're seeing a lot of opportunity in other markets. We're based in Baltimore. Historically, our bread and butter is the greater Mid Atlantic, but we've also ventured particularly south into the Carolinas, into parts of Virginia. Big business there, growing
Mhm.
economies, Charlotte, North Carolina, Virginia Beach. We're doing business in parts of Pennsylvania that are emerging markets and growing markets, both in the residential and the commercial sectors. So, not so much of what our business used to look like over the past couple years, single family rentals, but more
Yeah.
unique opportunities. And then on the investment side, and I would love to pick your brain on this and speak to it more, we're certainly seeing, and you know this better than anybody, we're seeing a migration of capital from other markets, particularly the stock market and markets like that, because of some of the economic uncertainty and the turmoil that's going on in the world right now. We're absolutely seeing a lot of our investors reallocate funds and invest those funds with us. Um,
Yeah.
and from there, I would love for you to speak more on that because I that's happening in real time, and you're at the tip of that spear. So, would love to get
Yeah.
your feedback on what you're seeing there.
No, it has been a very strong first quarter for us as it relates to, so many of our investors, Trius Lending Partners is just really referral and relationship based, right? So that is the history of our business, especially as it relates to investors, but also borrowers. And yeah, we've seen it. I think there had been in the last 12 months or so kind of a recency bias. The stock market, to your point, was just so strong. And really, arguably, even with the recent corrections, it's still really at not all-time highs now, but still quite high, if you kind of are just looking year over year. But I think what we've seen are just some questions being brought up as they relate to overall fundamentals, right? So the fundamentals of the stock market, the businesses that comprise the stock market, aspects of AI, where is value truly at? And of course, those are not, subjects I am a personal expert in. I consume it. I think it's really interesting topics, but I live real estate. I breathe real estate. That I'm rehabbing a house, right? Like that's who I am, and that's just it, right? I think there is kind of on the pendulum swing, a return to the the fundamentals, and that is really like what our business is. That is what I think is really attracting some of our investors to add to what they have with us or refer us to other people. So in short, yes, we are definitely seeing people reallocate and openly talk about, I am reallocating a bit away from some of my stock holdings. And we really see it in probably the most like defined sense. We have continued to experience growth as people invest via like self-directed IRAs, Roth IRAs, and 401k. So that's been the story of investor relations in the first quarter, is really supporting our existing investors and supporting some of that diversification as people kind of take in all of the headlines, right? Because we've been talking about very real estate specific headlines, but there's a lot of headlines out there, and I think they will have, or they do have, larger economic impacts, inflationary impacts. And this is of course not a political conversation, but bringing it back around to like my personal kind of experience, I continue to see the cost of materials go up a little bit, and prices and concerns about inflation, all that kind of stuff. So yes, in short, I'm sorry, it's a long answer, but we are seeing definite growth on the investor side as people are looking at this entire picture, like all of it. So yeah.
Walk me through. So you mentioned cost of materials. I mean, we hear that from a lot of our borrowers as well. And when we're trying to consult them through, does this deal make sense? Are you going to make money on this deal? Are we safe? Are our investors safe in this deal? Can you execute? And can this deal be turned around for everybody to make a profit on it? How do you look at a deal differently now, or do you look at a deal differently now, given the cost of goods and some of the uncertainty in the marketplace? How are you analyzing your deals personally? How are you seeing borrowers, right? You see every deal that comes through, being on the investor side of things and lining up capital. So are deals looked at differently now? Are you looking at deals differently now? Are you building in a 5% buffer or a 10% buffer just in the event that cost of goods continues to rise? And what are your thoughts around that?
Short answer, yes. Yes,
Yeah.
Steve. I'm looking at all of it, but I think it brings up actually a couple interesting points. First, the cost of materials, during kind of that rapid appreciation 2021 into 2022, it never really came back down in a meaningful sense, right? Rehabs that I almost like laugh at myself. Like, I can't believe I'm about to say this. I used to be able to do a pretty significant rehab on a small, like 3.1 and a half house in the Norfolk area. And I could get in and out for about $35,000. I can no longer do that at all. And the thing is, even as we came out of that period of both home appreciation, but also cost, like price of input and goods, cost of goods sold type of, increased cost of materials, that never went back down. And I feel like, and this is anecdotal, this is just my experience, it's going up again, and it's ratcheted up again. My concern, of course, as an investor, is that it will never come down, that these things don't actually tend to do so. So what had been, originally, in 2021, 2022, maybe I could get done for 35, 36,000. It'd gone up to 45, 46,000. And right now what I'm experiencing is more like 51,000 or something like that. That's, that's significant. That is statistically significant increases, but it's also not isolated, right? And it's being compounded by a couple things and a couple factors. Insurance is a problem, period. And insurance companies are looking at things I have never in my life seen or heard them look at before. So not just, environmental impacts, things like, that we're pretty accustomed to. This is a crazy story. I had a house in a great neighborhood, or I have it still, and we got a notice of insurance cancellation. Get this. They told us that they had done an analysis of crime rates, and crime had increased in that neighborhood. They were canceling. There was no way for us to fight it or argue it. And we immediately, of course, had to get new insurance in place, but we kept having the conversation because this insurance provider insures a number of our other properties. They re-looked at it, said, "Oh, I'm so sorry. That was our accident. We're just looking at this across a wide swath of this like general geographic area. And we're now looking at crime in addition to flooding and other environmental impacts. And we're just canceling on people. So they offered our insurance back. At that point, it's too late. Now we had to do other things. But
Sure.
I would say from a borrower's perspective, you just have to be more careful than ever. You have to look at every cost input from just, the cost of your cabinets, but also property taxes, insurance. Like these things they're all kind of pressures. And then finally, I guess, and I'm sorry, this is like, that's why I was laughing at the beginning. I was like, yes, it's all a problem. I think it's really encouraging to hear your part where DSCRs are doing incredibly well. So these long-term debt service coverage ratio loans where people, it's for specifically a product for rental properties typically. But I would also say that the underwriting as it relates, to those properties has tightened up a bit as well. So the rental ratios that these lenders are seeking, they want a stronger rental ratio. They want they want to lend less and make sure that you're getting more income than maybe they did 2 or 3 years ago. So everybody and everything, I think if there is a feeling, it's not one specific item, but everything's just a little bit tighter.
Sure.
Does that make sense,
It
I guess?
resonates a lot. And look,
Yeah.
on the short term hard money lending side, I mean, we have some pretty tight criteria as well.
Right.
We're analyzing things in a way that we feel like we need to, right? Our number one priority is keep our investors' capital safe. Otherwise,
Mm-hmm.
Jess will get some nasty phone calls. We don't want that, Jess.
Whoa.
So we always look at every loan through the lens of our investor. Should we put our investors' dollars into this loan? Is this loan safe?
Mhm.
What is the exit strategy? What happens if they can't exit during our term? What are our
Mhm.
options? If in the unlikely event that we need to foreclose on this property, how do we get out of this property? Right? How do we find
Mhm.
a tenant to take over this property, or how do we sell that property? Uh, Deals are tougher.
Mhm.
Real estate is tougher these days, certainly than it has been in the past few years, and that is reflective in our underwriting. Yet we're still busy. There's great deals out there. We are seeing bigger deals. It seems like there are greater opportunities the bigger the dollar amounts, in the single family, in the mixed use,
Mhm.
in the multifamily, in the commercial space. And we're entertaining those loans right now. Our max loan amount has increased over the years. Our minimum loan amount has gone up, right? We're funding
Mhm.
really high quality loans for great high quality borrowers, and there's still deals to be had. You just got to know how to find those deals, how to source those deals as a real estate investor, how to underwrite the deal through your own lens, but also taking into consideration all the things that I just mentioned. What is
Right.
your exit strategy? How is this property going to cash flow? What if rates go up 1 percentage point or 2 percentage points? Can you get out clean? Can you exit? You got to be able to answer all those things.
Yeah.
My lights just went out in here. Interesting.
Yeah. I
I
mean,
haven't.
I think,
It's all motion sensor, so I haven't stood up. I haven't
oh,
moved.
you get too
Yeah,
excited,
yeah.
you start moving and then
I
yeah,
sort
the
of,
lights.
I sort of like it better.
Yeah. It's nice.
Yeah, it's
I
calming. Yeah.
I will say this though, and what we've been talking about, and I want to be super clear because my actions speak louder than my words. Above all these things, above, that things feel a little bit tighter, not just feel, they are a little tighter. I am putting my personal money and my mouth, like my actions in it. I am buying real estate, right? I do think, and if Josh Shine, our CEO, is on, I
Hmm.
don't even know if he's listening right now, but real estate, it's just the ultimate, right? The buy and hold, the advantages of real estate, appreciation coupled with the ability, the tax benefits and all of that. Like, and again, we're seeing that through the actions of our investors as well, that recognition of just the continued value of real estate. So I think it's really important because acknowledging the realities of the market, the realities that are tougher, maybe, but also the realities of just the overall benefits and the fact that I would say just because things are maybe a little tougher than they were a couple years ago, it doesn't mean it doesn't lessen the value at all, right? And
Sure.
in fact, some ways, I would far more be investing in something I absolutely can understand and explain. I cannot explain Bitcoin to you. Don't ever ask me to do it. Like you will not find me doing that. And that is more evident than ever. If you're looking at from an investment or just kind of like what's going on, where should we be? I stand right here. So yeah, that's
Yep.
it.
It's tried and
Mm-hmm.
true, right?
It,
The one thing that we know, and it's backed by decades and decades and decades of just reality, is real estate. The long term hold
mhm.
strategy of real estate always pays off. Uh,
Yeah.
Real estate, especially the real estate loans that we fund, first lien position mortgage, good quality borrowers, those folks are going to find success. Um, and we see that, right? It's evident in we have a lot of savvy, sophisticated investors that have money allocated in the markets, global
Hmm.
markets, the current, the U.S. markets. They're taking money, a, a lot of money out of those markets, and they're placing it with us,
Yeah.
one, because of our track record, but also because it's backed by real estate, to your point.
Yeah.
So, uh,
I know you and I could like talk all day. This is our problem. They'll cut us off. They'll just end the webinar on us. This is classic, and then we'll just keep talking. But one last question, because you're asking me about kind of like what it looks like from my seat, both investor relations, and then again because I invest. But I guess my last, because I do feel really optimistic about it, right? Like I am personally invested. I'm
yeah,
invested in Trius as an investor, all the things. But you have a seat that I don't ever, day to day. I don't always get to hear your take. It's this, the COO. What are you most excited about for Trius as we end quarter one and we go into quarter two? What are you most kind of like? What do you feel the best about that we have going on?
and I didn't hear anything that came out of them.
Oh, you didn't hear
Oh,
me.
there you go. You're
Oh,
back. Yeah.
oh,
Why don't you
well,
just repeat? We'll start that. We'll
yeah, yeah.
forget that 1 minute
Okay.
ever happened, and we'll just rewind and start all over
I'm
again.
always
So,
trying to forget
could
certain minutes happen, Steve. No, I was gonna say that's weird. I was gonna say, so like we've been talking about kind of my seat and the experience in this last quarter and everything, but I was asking from your seat, from the COO heading up operations and sales and underwriting, what are you the most excited about as we head into quarter two?
I'm excited about the person on the other end of this call that just got, or this meeting that just got herself a nice little promotion there. Not only the head of investor relations now, but also the head of all real estate for Trius Lending Partners. So,
Oh, what?
congratulations, Jess. Yeah, you act
Oh,
surprised.
I
I am excited about that because I think who better to oversee the real estate that we own as a company than the foremost expert in real estate that I know, and certainly the foremost expert in real estate here. So
well,
kudos
thank
to
you
you.
kindly.
Congrats.
Thank you. Thank you.
And that's certainly something that I'm excited for, and excited to watch you and your team thrive. I think internally, right, Trius Lending Partners, I'm excited for the new team members that we have. We've hired some
Yes. Yes.
amazing talent. Your
Yes.
team, we're building your team out. We have some fantastic new talent that we've acquired on your team, and they're going to thrive. And they already have started thriving in that role.
Yes.
Um, on the operations side, on the sales side, on the underwriting side. So we've
Yeah.
really we've really just leveled up and bolstered our talent, and that's because we're bullish on the market. We believe in real estate. We believe in our business. We're still a growing, thriving business despite, look, all the uncertainty and all the economic challenges. Trius Lending Partners stands tried and true,
Yeah.
proven track record, 2 decades, and we're executing on a really great business model which allows us to continue to grow in a market that's quite challenging right now. I'm excited for some of the new opportunities geographically, the new
Hmm.
markets that we've expanded into, the Carolinas specifically. I'm very excited to grow North Carolina,
Yes.
South Carolina, Georgia, Virginia. We're seeing a lot of great opportunities, and we're here to participate in those opportunities. Um, and we'll see where that goes from there. We're looking at deal by deal. Are there other deals in other markets that we are interested in?
Hmm.
We're funding, like I mentioned Pennsylvania. We're funding deals in Delaware. We're still right here funding deals in the greater Mid Atlantic, especially the Maryland area, and the type of deals. Every day is a new adventure here.
Yes.
Nothing gets boring because we see different deals, different opportunities, and it keeps us fresh, keeps us on our toes. That coupled with the funds that we're raising from investors who are putting their trust in us and their belief in us to keep their money safe and to make them money over time. And the new talent, 2026 is another great year here at Trius.
I love that. I agree. We have, and if you're a borrower or an investor, or if you're just listening and trying to learn more, like we just have the best team. I find it's a great business, a business of real estate. But I feel like it's a great business, but it's the best team. So I
Yes,
love that. That's
agreed.
awesome. Yeah,
Agreed.
cool.
Do we have any feedback, any questions, any comments?
I I don't think so. I don't think so.
No.
We did do
We were
recently a investor survey, Steve, and so we started getting that feedback in, and people actually said they love this kind of stuff. So, maybe we'll try to get some more questions because I know people are curious what we're thinking, what we're seeing. So we'll keep doing it. You can always send your questions. Yeah.
Absolutely. We're here to answer them anytime. Call us. We're always here. We're always available online, offline. Let us know. And with that, I think we'll call it a wrap, Jess.
All right. Thank you. Fun
Thank
talking
you,
with you
everybody.
both. Yep.
You too.
Bye.
See ya.